Vesuvius India's September quarter results were above expectations. Now, this is the third consecutive quarter when the company has delivered double-digit growth. Remember, revenue growth for the March 22 quarter was 25%. For the June quarter, growth was 21%, and in the September 22 quarter, growth was 32% year-on-year. We assume that Q2 volume growth was somewhere in the range of 6 to 7%. Pricing improvement would be around 20 to 21%, and the rest would be change in product mix. Vesuvius was able to pass on the increased raw material price to its customers, leading to higher gross profit. Operating profit or EBITDA was higher by 81% year-on-year on the back of higher gross profit and operating leverage. Other expenses as percentage of sales have come down from 23% in September 2021 to 19% in September 2022. Vesuvius has incorporated a wholly owned subsidiary to set up a new manufacturing facility in Vizag, which would entail an investment of 57 crore in phase 1 and 36 crores in phase 2. And the company plans to fund the investment through internal accruals. Vesuvius has also laid the foundation stone of a new manufacturing facility at Pervada. This facility will be the latest addition to the existing manufacturing facilities at Kolkata, Visakhapatnam and Mehsana. Now, this facility, once commissioned, will produce the latest generation mold flux product and will further strengthen the company's product and services portfolio and enhance solution for customers. Now, this plant is likely to be commissioned in early 2024. Refractories are a consumable item used in manufacturing. India is likely to witness an incremental production of nearly 15 to 20 million tons of steel in the next 3 years from companies like JSW Steel, Jindal Steel and Power, Tata Steel and SAIL. According to the World Steel Association, crude steel production in India grew by 6% year-on-year at 93.3 MT from January to September this year, and in September 22 itself, production increased by 2% at 10 million tons. The export duty imposition on steel is likely to impact production in the near term. The Street expects export duty to be withdrawn by December this year, given that domestically and internationally steel prices have corrected and large Indian steel producers are exporting nearly 25 to 30% of their volumes. Meanwhile, net cash and cash equivalent as on 30th of June for Vesuvius stood at 450 crore rupees compared to 554 crores as of December 31, 2021. Reduced cash balance was on the account of investment in capex, higher working capital and dividend payout for the year 2021. With new capacity coming up in the next 1 year, we expect higher revenue growth, export opportunities and market share gains for the company. Now, given the high cash levels in the balance sheet, we expect the higher dividend payout to improve return ratios. The risk to our assumption, of course, is lower steel production, inability to pass on higher input costs, and the increase in royalty rate paid to the holding company. Now, shares of Vesuvius touched a new 52-week high and a lifetime high of 1729 on the back of good results. We continue to remain positive on the stock, given that it's trading at a PE multiple of 22x CY24 earnings, as against a median PE of 27x for the last 5 years and 10-year median of 25x. Investors expecting reasonable returns, according to us, can accumulate the stock at current levels and buy more on declines.